What's up traders, welcome to Failure to Displace. In this video, I'm going to look at the optimal trade entry 5-minute session liquidity sweep strategy that I recently released based on the month of July's price action. And thought this actually might be something worthwhile recording for you guys because you may find it useful also seeing how I'm analysing the various setups that were available to us. So if you haven't seen my optimal trade entry video, the link to it is popping up in the top right hand corner just up here, so please feel free to go and watch that to get a better understanding of what we're actually looking at. Essentially the basic premise of it is we are waiting for session liquidity to be swept. When session liquidity is swept, we are looking for a break of structure with displacement being in the form of a fair value gap. We need a candle body close to confirm the break of structure. Once we have a candle body close over a break of structure with a fair value gap, we will use our Fibonacci to identify the optimal trade entry retracement. We will enter long or short when price taps optimal trade entry. We're not going to trade within 15 minutes of red news folders. Our stop loss will be moved to break even, or you will close out in full when New York opens. So this is if you're in a trade in London. So between the London and New York crossover, you will either close out of any trades that are live or move the stop to break even, depending on how things are going. We will close all trades by the end of the New York PM session, which means I'm not going to be letting trades run overnight. So these are a few additional things that I'm just adding to this strategy to avoid some confusion. Our stop loss is going to be at the optimal trade entry origin, so that's going to be the swing of the first point of contact for the optimal trade entry, the swing high or the swing low. And our take profit is going to be at 3R. So we're going to be just looking at taking 3R trades. We're not going to be looking at taking profits, partials, and we're not going to be looking at moving our stop loss to break even. So the only point we're going to be closing early is if we do get a reversal signal or if we're into the London-New York crossover. The results from me backtesting this were 23.14R. So that's a 23.14% return on your investment. The win rate was a fantastic 79%. Win rate includes break-evens. So as long as it wasn't a loss, then I was classing that as a win. So that went to the win rate. So there was 15 wins / break-evens, very few break-evens in all fairness, and 4 losses out of 19 trades total. So really good solid results. You could risk 1% for a 23% return, but based on this, potentially you could risk 2%, which would yield 46% return because the win rate is so good. Let's jump into the charts now and take a look from the beginning of July right the way through the month and see day by day what setups are available to us. So this is the first trading day of July, Monday the 3rd of July. Before we jump into the backtest or the analysis for the month of July, let me go through the settings and indicators that I'm using. So the indicators on screen, we have our session liquidity tracker. Links to that are in the description, which is showing red lines when session liquidity is tapped and green lines if there is untapped liquidity around us. The green lines will extend across the screen. I'm also using a session indicator to show my actual trading window. So my trading window is 1 o'clock in the morning through till 8 AM, and then at 8 AM I will transition over to the New York session, which is 8 AM until noon, so 12 lunchtime for New York. So essentially I can be trading anywhere between 1 AM in the morning through till 12 noon New York time. Mentioned before in the rules sessions, I will look at the transition between London and New York, and I will be closing out trades at that point to avoid New York digging back into my trade and stopping me out if I'm in one from London. On top of the session and liquidity tracking indicators, I have my fib, which you will need to spot your optimal trade entry. So this first one, 1.0172, so this is going to be my stop loss area. The 0172 is just giving me a tiny bit of breathing space, so this is a couple of points below the swing low. This is just to give the stop loss a couple of breathing points. Optimal trade entry is going to be at 0.618, and then the take profit 0.616. That's approximately plus 3R. So I have this on my fib just to give me a rough idea of where plus 3R is when I'm looking to place my trades. So those are the 3 settings on the fibs. So those are the indicators that we need on this. We'd also recommend an indicator called Fair Value Gaps by Nephew Sam. That will show you fair value gaps while you're trading this live. Again, links to all of the indicators, and there's a video explaining my settings all down in the description of this video. So here we are, first trading day of July. We did take out the high of Asia and then proceeded to displace lower, displacing through the low. There was no retracement here to give us an entry to take out the Asia low. What I've noted on here, using our 5-minute time frame, we can clearly see the previous day's range. So a very bullish day on the Friday. If we pull a fib from the London low to the daily high, which is the New York high, we've retraced into optimal trade entry. So this is an area where you should be taking note, looking for any kind of potential reactions. So we can see once we've tapped optimal trade entry, we do get a really nice reaction, which is a break of structure with a body close, leaving fair value gaps. So that's all three of our key points hit. So we can then pull our fib from the high, from the low to the high, looking for a retracement, back to the 618, which is this grey line, which is tapped perfectly. And then ultimately our 3R is hit perfectly on this trading day. We do have news. So on the 3rd of July, we have PMI in the afternoon. So we'll be very cautious about trading this. The news drops 10 AM. We do have a break of structure. We do leave displacement. We have taken London high. So there is a potential trade on the cards. You may want to wait for confirmation that this is worth taking. This happens right at the end of the trading window. So you can see we stop bang on the 618. We have a small rejection candle here. So there's a potential entry there. Stop loss above the high. You would hold this until the close of the New York PM session, giving you a 0.88R on that particular trade. So it was a winner, but we got nowhere near threatening our 3R that we would hope to achieve. So that's two trades on the 3rd of July. Moving over to the 4th of July, this is obviously a huge bank holiday in America. No volume, no trades to be taken on bank holidays. Specifically bank holidays in the US I'm talking about. Coming into the 5th of July, you can see we sweep Asia low into our London open, break structure, again pull back to the 618, we have displacement, candle body closes, so this validates our optimal trade entry, tap the 618, perfect reaction, and then we hit the 3R with our basically zero drawdown. So textbook trade there. On the Wednesday, OPEC meetings all day, and then FOMC is not going to be while 2 PM, so not while the New York PM session. So we've got nothing to really worry about for ourselves in the London trading window. Coming into New York, we're already out of our trade. So as we come into New York, we're going to be looking for a sweep of the London high or the London low. We don't get that sweep until the very end of our trading window, so at noon, which means there's no entry for us in the New York AM session. So here we are looking at Thursday, the 6th of July. So we sweep the low. There's no immediate reaction here, but what we can see is we can see big displacement. So this is the note that I've put here. What are the candles telling us? And we can see that we've got a huge bullish displacement here versus very small retracement candles from the bearish side. So this would lead me to pull my Fibonacci from the current daily low to the daily high. Given that we've swept the Asia low, so this is a Judas swing, pull back to the 618 for an entry, and then looking at your 3R trade, which it hits just coming into the crossover between New York and London. So again, a nice 3R trade there. Solid. You just need to realize obviously that this has happened. Let the candles guide you in where you want to be trading. So huge displacements coming up. Look for the optimal trade entry based on that. There are multiple red folders in the afternoon. So this is an area where we wouldn't be trading. We'll skip over to Friday the 7th of July, where here we can see we've taken a loss. So we took out the Asia high. We had a break of structure just here. Break of structure, totally ignored the 618, pulled back. Let me just get rid of that. So we totally ignored the 618, it just shot straight up and stopped us out. So there's no trade there. We have come down after taking the high. We've got a break of structure. We've taken out Asia low here. So this is what I've noted here. Taken previous New York PM session low, so we can start looking for longs. We've taken out the Asia low, so we've got the Judas swing. We've taken out additional liquidity now in the form of the PM session. So I would start looking for potential longs here, but the break of structure doesn't happen until here. The pullback to the 618 happens into New York when we've got red news. So there's no trade in this one. So in regards to this day, one trade in the London session, which unfortunately was a loss. So coming into Monday, the 10th of July. So Monday, the 10th of July. Bank of England, Governor Bailey speaking. So red news at 11 AM. So this again is later on into the New York session. So we're trading London. We've got no red news in the folder. We've taken the low. It's quite choppy price action here. Our break of structure is on this level here. So we pump up, our fib is pulled from the low to the high, the 618 is our entry, so again the grey line, which we tap, a little bit of consolidation and ultimately pull away. Now we don't hit 3R here. This is one of those where we're going to be closing out break even because we've got 2.5R and then price pulled back at the open of New York, which means you're either going to be pulling your stop loss to break even or closing out for a very, very tiny profit. Either way, this does come down and take the London low. So this one unfortunately didn't hit our 3R, but is classed still as a win because it was a break even or a very small profit trade depending on how you manage that one. And then obviously coming into New York, we've swept the low. This is the break of structure. We've had no pullback into optimal trade entry, so there was no chance for us to get long to join this move. Coming into the 11th, we had red news at 2 AM. So that was this red news here. So we've swept the high, so we wouldn't be taking trades beforehand. We've got the red news, pullback happens. Let me just clarify this to make it a little bit clearer for you. We have swept the high. We have broken structure with body closes. So we have got our break of structure at this point. However, we aren't going to be taking trades within 15 minutes of red news dropping. So we're at 1:55. 2 AM is when the red news drops, which is where the pullback to optimal trade entry would occur. So we would not enter on this move coming back. So this isn't a loss because there's no valid entry here, because we wouldn't be taking this due to it being within 15 minutes of the news release. Price comes up, takes the high. We're outside the 15-minute window, so we can start looking for longs. We take this as our break of structure, because this is the swing low that led to this high. So we do get a candle close. Price doesn't pull back to the 618. So we're taking our fib from the high to the low, expecting or hoping for a pullback to the 618. And in this instance, it doesn't reach there. It just melts once it reaches the 50% mark. So no trade for us in London on the 11th. So in the 11th, we take the London low, pump up, break of structure with a candle body close. Very, very small candle body close, but it is a candle body close, so it's within the rules, and we have got a fair value gap. So we have left displacement on two legs of this move here with a candle body close. So that does validate the optimal trade entry. So we will take our fib from this low to this high, looking for an entry at optimal trade entry. Price immediately comes down, taps us in here. So we will be entered into the trade here, Obviously we have some drawdown, a little bit of consolidation, but eventually price does run away. Again, July the 11th, 11 AM is when the Bank of England guy was speaking, so we don't want to be entering trades at 11, which is here, but we would have been already in the trade prior to the 15-minute window happening around the 11 AM news release, and then the news does drive us away. As the news dropped, you may have wanted to pull your stops to break even to avoid any whipsawing, but that does ultimately play out. So this one I've highlighted as questionable because we did sweep the high prior to the London window opening up, so before our 1 AM trading window happens. However, as I said previously, let the candles tell the story, and we can see that the bearish candles now, we've got large engulfing candles. The bearish candles are much larger than the bullish candles. So this would give me confidence that price has taken the high and is seeking liquidity lower down. So I would take the break of structure is from here or here, either one. And so we've got our break of structure with candle body closes, leaving displacement. So the fib is pulled from the high to the swing low before the retracement starts happening, which is this candle swing low. Price comes, optimal trade entry. Nice reaction from optimal trade entry, and then ultimately does come down to hit our 3R. So nice winning trade on the 12th. Wednesday the 12th. 4 AM, you had the Bank of England guy speaking, which is just in here. So we were already again in the trade before 4 AM. So before the Bank of England man was speaking, we could have potentially gone to break even or closed out at that point, whatever you wanted to do. Ultimately, it never came back to the entry and hit our take profit. So again, how you manage that when the red news was dropping, if you're already in the trade, is entirely up to you. I would have just gone break even there just to avoid any again whipsawing and taking us out. 3R achieved. We can see in the New York session as it opens, it just runs away. There is no pullback. There's no opportunity to get an optimal trade entry anywhere on this within the trading window. So here we are coming in. We've got red news 2 AM. What day is this? Sorry, this is the 13th. So Thursday the 13th, 2 AM. GDP on the pound. So we've highlighted the 2 AM. So we need to be cautious around that. We're not taking trades within 15 minutes of this news release. We sweep the low, break structure with candle body closes. As a result of the news, I would be very cautious on this pullback. So I wouldn't enter just based on the 618 straight away of this pullback, because this entire move could easily get retraced in full. What would give me the confidence is these rejection candles at optimal trade entry. So I would see the first rejection candle and I would probably take my entry on the first rejection candle. If I didn't take that, I would definitely take it on the second rejection candle, and then ultimately targeting our 3R, which gets hit just prior to the London-New York crossover. Into New York, we have red news at 8:30, so there's no trade here as we've swept the high. We're within 15 minutes of the news dropping. After the 15 minutes of the news drops, there's no entries given for a short trade or a long trade. That's a tricky one. On this one, we are on to Friday the 14th of July. Friday the 14th. It's a French bank holiday. We don't worry about French bank holidays. The only bank holidays we're concerned about are the US bank holidays. 10 AM is a red news folder. So we're trading in London, so we're well before the 10 AM window. We sweep Asia low coming into our London trading window. Our break of structure is at this point here with a candle body close. So we get candle body closes. Have we got displacement? Yes, we've got fair value gaps on this break of structure. So this is a valid optimal trade entry. So we will pull our fib from high to low. This is where it gets a little bit frustrating because we've had such a big move and we've taken the Asia high. your stop loss is quite wide. So in this one, we've got a 16 pip stop loss to the optimal trade entry. Price does pull back. It does react at optimal trade entry. However, due to our rules, coming to the London-New York crossover, we would close out as New York opened, which would either be a break-even trade, or if you just close out, you're going to get 0.26 profit. It's a very, very small profit. Either way, it's not a loss, but you haven't achieved your 3R. Coming into the New York window, you can see price is just consolidating within the London range, so there's no trade in New York. 17th. On the 17th, we have news at 8:30. So again, nothing to worry about in the London session. So in London, we sweep Asia high. We don't get a break of structure for a trade. We continue pumping higher. We have swept New York PM session high, and we have swept the previous day's high now, New York AM and London high as well. So our entry comes when we have our break of structure with a candle body close. So this is the swing low that we're looking at for the break of structure. This is the swing that put in the high. So we need candle body closes with displacement. So we have candle body closes here. This candle and this bullish candle, well, this bearish candle, sorry, is the one that closes below. Only just, but we do have a candle body close. We have had displacement. So in this leg here, we've got displacement, and we've got displacement here between these two candles as well. So we've got displacement, we've got a candle body close, validates our optimal trade entry, which is pulling the fib from the high to the swing low. Optimal trade entry is tapped perfectly, and then price rockets away. Again, it's up to you whether you will close out in full at the open of the New York session or bring your stop loss to break even. If you'd have just brought your stop to break even, then you've got a plus 3R trade. As New York opens, we don't come back to the entry. Right, there's nothing that happens in New York. So New York takes London low, takes Asia low, so it puts in a new low of the day. We've got red news dropping at 10 AM. As we mentioned, we don't get a break of structure, we don't get any body closes, there is no entry in the New York session. Tuesday the 18th. Tuesday the 18th, we have news in the US session at 8:30 AM. So nothing to concern us in the London session. Here we've got a break of the Asia high, so we're looking for a break of structure now with displacement, which happens here. So we sweep the high, we break structure, we leave fair value gaps, validates our optimal trade entry, pull from the high to the low for our fib to get our optimal trade entry at this level, and price just runs straight through us for a loss. We have created a new high here, so we can look for a second entry. Price breaks down, it closes, breaking this structure, so this is our new break of structure. From this candle here to here. So we've broken structure with body closes. We are leaving displacement, so we can pull our fib from the high until we start getting some kind of retracement. So back here, we don't come back to optimal trade entry. Back here, we don't come back to optimal trade entry. Put in new lows, don't come back to optimal trade entry. We do come back to optimal trade entry towards the end of the session. So this whole leg, we pull back to optimal trade entry, we respect it, and we pull away, so we could potentially take an entry here. London crossover, London New York crossover, stops to break even, you're going to get stopped out. So that's a break even trade. And we do know that we've got news at 8:30. So there's no re-entries. Now, if you hadn't gone stops to break even, this would have actually played out. But our rules are get to break even as we're doing the London New York crossover. Coming into the New York session on the 18th, we can see that we did have the red news drop. It pushed price down, took out the London session low, and then began consolidating. We created a lot of equal highs here. So I wouldn't class this as our break of structure with displacement. We did wick up and take out these equal highs. My break of structure will be this swing high here, because this is a standalone swing high that was put in before this low. So this is just essentially engineering liquidity in my view. So I would want to see displacement above this level, not this level. So price pumped up and then pulled back and ultimately melted. So there was no entry on the 18th of July. Going forward, we had red news. So you will see a pattern here. Red news often leads to losses, which is why I'm recommending potentially reducing your risk when trading red news, as well as avoiding 15 minutes either side of the red news drop. Price can often be erratic after the red news as well. So it's maybe potentially better just to reduce your risk so you're not losing full 1 hours, maybe half that. This is the setup that we did have. So the red news on the 19th was CPI for the pound. And then we've got a couple of a red news folder as well in New York. So this is the drop, 2 AM. The news pumps us down, we take out the low, we come back. We're ignoring this retracement because this is all driven by the news driver, which these moves will often be retraced. You can see we're not given any opportunity to get into a trade at this point. We do take the high, so this is the daily high. We break the daily high there with this break of structure. So we have a break of structure from the daily high here. We do leave displacement as well. So we've got a fair value gap here as we now close below this break of structure. So this validates our optimal trade entry, pulling our fib from the swing high to these swing lows, looking for entry at optimal trade. We do get a small reaction at the optimal trade entry, but ultimately price just reverses and goes straight through. So that is unfortunately a loss on the 19th. Coming into the New York session, we're not given the opportunity to get into a trade. Price continues down, takes out the low from London, so we are now looking for a long. We do get a break of structure here. So we get a break of structure, candle body close, we have displacement. However, the retracement comes to optimal trade entry outside our trading window. So as mentioned in the rules, we will finish trading at 12 noon. The entry happens at 12:10. So you need to stick to your rules. This would have ultimately played out if you had taken that, but rules are rules. And once you start bending one rule like that, well, it's a slippery slope. Let's carry on. Onto the 20th, we're not presented with any entries. So price pumps down, it takes the Asia low, but it doesn't break structure. So this is our swing high that causes the swing low. You can see that we never get the break of structure in London. Likewise, coming into New York, price breaks the London low, just melts. There is no pullbacks, there's no opportunity to get into a trade. The 23rd of July now. We take Asia high. We get our break of structure with a candle body close here. We've left displacement on this leg here. So there's only one displacement candle, but that's all I need to validate my entry. So I've had one displacement, and yes, it was filled, but that wouldn't invalidate the entry in my opinion. So I'm pulling my fib from the swing high until we start getting the retracement, which ends up at this low here. Price ultimately taps the OTE and then proceeds down. Now we ultimately get to a 2-hour trade, or 1.96 to reach 2. Before the London-New York crossover, which point you would either go break even or close out there. Being in 2-hour profit, I'll probably just close that out. So that gives us our 1.97, let's say, our trade. New York doesn't give us an entry, so we take the London low. We do get our break of structure on this candle. We get a pullback, but it just falls short of tapping the 618, so there's no entry in the New York session. Stacked red news folders on Monday the 24th. Lots of stuff happening on Euro, lots of stuff happening on the pound, lots of stuff happening on USD as well. I'd be very hesitant about trading this. You can see why. Price absolutely melts. There's no real direction. New York just consolidates within the London range. So there's no entries on the 24th. Got a few days now of no entries, so this is a frustrating time. We sweep the high, our break of structure is here, so we do get the break of structure with displacement. Unfortunately, we do not get a pullback into optimal trade entry, which is here. We could follow this down, we never get a pullback, so there's no trade in London. New York takes the low, the break of structure is here, so we have swept the low, we are now looking for longs. We break structure with a body close on this candle, and again, pulling our fib from the low to the high, we never pull back to optimal trade entry within our window. So again, we are stopping trading at 12 noon. So we never get a pullback for an entry, so there's no trade that day. 26th, we take the high, however we never break structure with a candle close. So there's never an entry trigger. So there's the new high, there's our swing low, 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 and then here we do get the swing low with a body close with displacement. So we've got the three triggers, we never get a pullback, and then New York opens. So there's no entry at this area here. New York just consolidates within the London range, not giving us anything. And then looking at this, which is 26th, we've probably got news. FOMC in the afternoon. So again, probably don't want to be trading in the afternoon session, morning session anyway. News is just going to mess up price action. We finally get a trade, so we've had 2 or 3 days of not being able to trade, and then when we do get the trade, unfortunately this is a loss. So a very frustrating week. The week leading up to the 27th. We take the high. Our break of structure is here with a body close. So we have finally get the break of structure with the body close, leaving displacement. So we can pull our fib from high to low. Optimal trade entry. Price just motors straight through it. Doesn't respect optimal trade entry at all, giving us a negative 1R. So that's our loss there. So several days of not being able to trade followed by a loss. You'll be getting very frustrated at that point. But it's important just to try and stick to your plan. We have red news coming up at 8 AM, I believe. 8:30 advanced unemployment. We have news at 8:15 for the euro as well. That's Thursday the 27th, isn't it? Yeah, so there's euro news happening here and US news all happening at the same time. So probably would be sensible not to be trading this anyway, in all fairness. Stack news folders, but we're counting that as a loss. It was a valid entry and it was a loss. You'll notice a pattern that the losses are all happening on red news days. Friday the 28th. Friday the 28th we have CPI from Germany, and this is all day. Given that Germany is such a big player in Europe, I would not be looking to trade this. I don't know how this would affect price, so I would not be looking to trade Euro USD all day. And then coming into the afternoon, into the AM session of New York, we've also got additional red folders, so it's a no trade day for me. And then finally, coming to our last trading day of the month, which has no news. So this is Monday the 31st of July, the last trading day of the month. We've got no news, so we've got a clean card to play with. We sweep the Asia low, we get a break of structure. So again, the sweep does happen just before our trading window occurs. So we've got 1, 2, 3 drive down. I would still take this because I'm going to let the candles tell me what's happening, and I can see that we've got bigger candles on the bullish side. So we've got engulfing candles on the bullish side, break of structure, fair value gap in here, optimal trade entry here. So I'm looking at this as the Judas swing. We're taking the Asia low and I'm expecting Asia high to get taken after a consolidated session. You can see how I'm saying consolidated because Asia essentially operated within the New York PM session range. Here, quick breakout, pull back into the range, optimal trade entry is here, and then we hit our 3R nice and quickly, basically zero drawdown on that trade. So there we are, that's the month of July. 23 are as our return, 79% win rate, 19 wins, 15 of those are wins or break evens. You'll see from that walkthrough there wasn't that many break evens. So a very, very good win rate. Only 4 losses, which is the main thing. So that's a really good indication. This 23%, if you were risking 1% of your account balance, if you were risking 2, then that's 46% return within the month. And given it's such a good win rate, 2% maybe isn't that crazy. The thing that I would say, and what I'm working on, obviously this is a new strategy, I'm just trying to compile data, figure out the best way to trade this moving forward. I think that the entry criteria is really, really solid. The one thing that may need adjusting as we move through various months of the year with various types of volatility is the actual trade management. So with these results, we're just looking at a straight 3R. However, going into lower volatility months, right now we're into August, which is the summer slowdown. Everybody's on holiday. And then going into the winter period when we have the Christmas vacations and into the new financial year of February, March, maybe the volatility isn't there. So maybe instead of holding out for a 3R, we need to adjust this, taking partials at 1R, moving stop losses to break even. I'm not quite sure about that. That's where you guys can backtest it for yourself, figure out what works best for you and your risk profile. I hope this was useful for you though. Again, this was mainly just for my own benefit. I just wanted to go back and walk it through just to see step by step how this could have been traded, try and remove as much emotion from the trading process as possible. If you did enjoy the content, please leave a thumbs up. And if you have any questions, leave them in the comments section down below. And likewise, if you're enjoying the content, please consider subscribing. I am dropping videos on a very regular basis and I'd love to have you on board. Thanks for watching and I'll see you again in the next video.